Ladies and gentlemen, Greg McCloskey from ForexLive.com. I'm going to take a look at some of the major currency pairs after the U.S. jobs report. Well, we know the data by now with non-farm payroll rising by 209,000, but the unemployment rate came in a little bit lower than last month at 3.6%, and the average hourly earnings rose by 0.4%, which was a touch higher than the 0.3% expected, and 4.4% year on year, which is higher than 4.2% expected. So we did see the dollar initially move lower off of the non-farm payroll number. And for a currency pair like the euro versus US dollar, that meant we got above the 200-hour moving average here. That is the green line in the chart. The last few days have seen that 200-hour moving average find sellers against it, including two separate tests in trading here today before the break to the upside. Now the next key target on the top side, as outlined in my pre-report, was up at the highs for the week and also highs from last Friday's trade right here at the 1.09329 level. And as you can see, the price moved right up to that level and started to back off. We currently trade at 1.0919. If we stay above the 200-hour moving average, the bias is still tilted to the upside, but we do still have resistance at the 1.09329 that we have to get to and through. If we're able to get through that level, then we start to look toward this level up here, which is defined by a number of different swing highs through here, ahead of the extreme. We reestablished the resistance here, here, and here. So that level comes in at 1.09612 to 75. If we move back below the 200-hour moving average, all bets are off for this currency pair. We then look for a rotation back down, potentially to the low for the day at 38.2% retracement. Let's take a look at the dollar versus yen next. And if we look at that currency pair, the market fell to the downside here off of the report, and we went down to test the 38.2% retracement. That level held a support at the 142.52 level. So like the euro versus US dollar, went to the next level, next target, and found support. The price has since bounced higher, currently trading back above the low price from going back to this day right here, near the 142.91 level, currently trading 143.05. On the top side, watch this area between 143.49 and 53. That level corresponded with the low price from yesterday's trade, and then we broke below that level and used that level as resistance. These are the reasons right through here that I'm focused on just in the short term for this currency pair. Also, this level going back to here was a swing high that got a little choppy through here. But anyway, watch this area up here on the top side for the dollar versus yen. Let's take a look at the sterling versus US dollar next. And if we take a look at this currency pair is moving to the upside here with a weaker US dollar, extending to the highest level since this day right here, which is the June 22nd. Some choppy action here in the pound versus US dollar, but we did move above this swing area at 127.59, really down to 127.38. As long as the price can remain above those areas, that's more bullish. Also, of course, traders will be watching the high price from yesterday near the 127.78 level, just above that level currently at the moment at 88. If we can stay above that level, the bias remains a little bit more to the upside. Finally, the dollar versus Canada. We did have the jobs report come out stronger than expected in Canada, with a big surge in the full-time jobs. That has sent the dollar Canada to the downside and back to this swing area. This swing area, as you can see, is defined by a number of different swing lows through here. Get on my arrow here, here, here. Then that area became resistance through here, and then support again here before rotating to the downside. We moved above that area in trading yesterday, and we held support here. And as you can see, we are now back into this area. This level also represents the 38.2% retracement of the move down from the either June high or May high down to the low price that we saw down here. That level comes in 133.213. So 133.13 and 133.22 is the key, is the support level. That if we break below that level, we'd be looking toward the 100-hour moving average in this currency pair and this other swing area down through here. So there you have it. A look at some of the major currency pairs after the U.S. jobs report. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.